Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. And for those of you who are new, welcome to the Daily Gold YouTube channel. As always, every Friday, we do our precious metals recap and look ahead. And what a past few weeks it's been for precious metals. Not as exciting this past week. We did have gold close up on the week over 1%. Silver was down 2%. GDX was up 2% on the week. GDXJ up about 1% on the week. SILJ was up 1% on the week. So the stocks had a good week, although they lost some gains in the last day or two. So kind of a bit of a mixed picture, and that's kind of what my analysis will be in this video. But more importantly, this video is being recorded on Friday, March 21st, 2025. It is the first day of spring. Winter is gone. I know in some places it might take a couple weeks or a month or so for spring to really catch up, but winter is done. We are in the spring now. Things are looking up. So hope you all had a good winter, and I wish you all a great spring and also a great weekend ahead. But enough of me babbling. Let's get to the video, the charts, and the analysis. So starting off here, we're taking a overview of the entire market. I love this feature of stock charts. And I don't think you need to be a subscriber to look at these charts. These are called the candle glance charts. And so you can type in as much as 12 and look at them very quickly. So these are daily candles for the last 2 months. So what do we see here? What's interesting to me is a little bit of selling in the minors, but these are not negative candles. Looking at GDX, GDXJ, and the HUI. If you look at these candles, okay, today that's a bullish hammer after a couple days of declines. But look, these are white candles. So even though the miners were selling off, that's accumulation. So when they're selling off after a big run, you would think you might get some nastier candles, at least not yet. So that's kind of encouraging. Looking at silver, we can see silver has been weaker than gold. 2 days of a strong sell-off, only one in gold to end the week. Here's gold against foreign currencies is an easy way to look at it. So that came and that came up here right to the high in February, whereas gold made a higher high, and that was driven by the weakness in the dollar. So looking at the dollar, it looks like it's making a little bottom, so that could rally. And the stock market as well, there's some other potential indicators, some breadth indicators that would argue the stock market might be able to rally. So general comment is we've had this really big move in gold relative to the stock market, and that's a good thing. We have huge breakouts. But after that huge move, maybe in the very short term, we're going to see the stock market get a bid, the dollar rally a little bit. But at the same time, maybe some of that money going into stocks is going to go into miners. Normally it doesn't happen, but I think we are potentially set up for that. So those are kind of the cliff notes for this video, but let me get into the other charts before I make this too long. And so again, this is the weekly 60/40 fund. Again, I have my own data. I track it monthly. But this data and this 60/40 fund tracks really, really close. And so this was actually up on the week. So this is a clear breakout. Like we had the breakout here like a month ago or 3 weeks ago, then a little bit pullback, and then the last 2 or 3 weeks, very strong move higher. So this breakout is going to hold. I think gold against the S&P, you will see something similar. This is at 0.53, 0.50 is the resistance. So that does give us about 6% grace, but even if it comes back to 50 or even a tiny bit below 50, that doesn't concern me. This is a breakout, and more importantly, this is a strong breakout. So again, it might pull back a little bit in the short term after a really strong run. Now looking at gold sentiment, gold is getting stretched as far as sentiment. Now we love to see, again, this is a beautiful breakout of a 13-year cup and handle pattern, big move higher, which you expect. Big picture, don't want to get bearish. But maybe we can see a pause or a little correction here, or the market goes sideways for 2 or 3 months. And so looking at the optics from sentimenttrader.com, I look at the raw or the daily optics, that's 79, but the 50-day moving average of that is about 78. So you can look here and see the colors, and you can look at other, let's go back to the 2000s. There was a peak here. Look at where the 50-day optics was. There was a peak here, of course, in 2008. We can see, well, before that, the optics was pretty high. The market still went up. Okay, here's the peak. with that 2008 peak. 2006 was a significant peak. I think the optics wasn't as strong as I was expecting. But anyway, if you look at the history here, I mean, you can look at here and here, you can see where we're at right now. This is extended. This is, yeah, that's extended. That's what I meant to say. But again, this is extended after a epic 13-year breakout. Of course, it's going to get extended after a really strong move. We just want to see this move pause, correct for 2 or 3 months, just reset, have the sentiment reset, and then that could put it in position for a huge move, especially if the fundamentals for gold, namely, if the economy weakens toward a recession or we're getting more inflation, kind of going into stagflation territory, if those conditions really strengthen for gold, that could set up another huge leg higher in gold later this year. And that is evidenced by this chart here, where this is the all-time high breakout analog for gold. Now, I'm looking at the current breakout as well as three before that, 72, 78, and 2009. So these were the other three breakouts where the market broke to a new all-time high and it held. There were, I think, two others. You got to go back to 2007 and then 2020 where they broke to a new all-time high, but it did not hold. So these are the three other ones that held. This breakout is obviously holding. So this is where we are now. Look at the two averages. We're right at the two averages. Now, this is a little bit scary how good this looks, seeing how the average shows that you can get a huge acceleration in the next, not even the next 12 months, but just later this year. Maybe this one is a bit of a better, this average is a bit of a better line to think might track where we are. I don't foresee us shooting up higher like that. But maybe, again, if we have a bad recession, really bad stagflation, the economic picture worsens, I mean, you could see this make a move like that. Remember, people, we've just broken out from we're only a year into a breakout of a 13-year cup and handle pattern. So that's setting up for a really, really good cyclical move. And we've just broken out gold, that is, against a 60-40 portfolio in the stock market. So I'm not saying you want to go levered long here and buy the riskiest call options and all that stuff. This is just letting us know that if we get a bit of a correction, this thing goes sideways for a couple months, but the fundamentals really strengthen, that could set this baby up for another leg higher to 4,000 and above 4,000. So keep that in mind. Don't, even when I'm talking about a rest for 2 or 3 months, or maybe even 4 months, that's hardly a blip in the big picture, because I think the odds of us going much, much higher in the next 12 or 18 months are pretty good. So now let's get into the more usual charts that we look at. So daily candles for gold, daily candles for silver here. This is the 150-day for gold. This is the 200-day for gold. And we are getting kind of stretched. I mean, looking at the moving averages, the 200 days at 26.22, but we're all the way up at 30.50. And by the way, 30.50 was a triangle target from this breakout here, the measured upside target. Maybe I didn't mention it last week, but I have been mentioning it a lot. 30.50. So we hit that target. We hit 3,000. The measured upside target from the cup and handle pattern. Now, a rougher target is the log target, which is the percentage target, which comes in anywhere from 3,800 to 4,100. So that's the next target I'm looking for gold. In all the historical cup and handles I've looked at, these patterns are rough. They're not as clean or perfect as what's happened with gold. But in each case of all those patterns, they went from the measured upside target to the log target in 6 to 12 months. So keep that in mind. Another potential bullish point for gold. But I'm getting off the short-term track here. But these are the support levels we're looking at for gold. So initial support might be here. I could have put a line in here, call it 29.50 or 29.40. But on the daily chart here, you can see this is a good level, 28.50 to 2900. There's support here. If we are going to get a significant price correction, then looking at where's the 200-day, 26.22. I mean, you have this right here in the 2700s, the 200-day. This is coming up. This should hit the 2700s. But by the end of April, it'll clearly be above 2,700. Maybe It'll be 27.50 in May. So again, if we are going to have more than a 10% correction in gold, this is the level that I look at. And again, in a month or two, or maybe a bit longer, that could come down and intersect with the 200-day moving average. Now, looking at silver, I know that stock charts change their data a little bit, so I don't know. I mean, this is futures I'm looking at. I don't know if these prices are perfect. Are they a little different from what we've been looking at in recent days? But so it came up to 34 and silver could not punch above 34. So it's selling off here. There is some support here, 32.5, 33. Maybe silver can make another move here and another stab at 35. Maybe it needs to correct a little bit more before that happens. But this has just been a really slow grind here, moving higher. And so it would be nice to see if silver can get to 35 on this move. And we're coming up to the end of the month. In the end of the quarter, how many times have I talked about 32 or 33 for monthly and quarterly resistance for silver, or 35 as well? Are we going to see silver hold above 32 and 33 for the end of the quarter, or are they going to gut punch us again at the end of the month? We'll see. And then another point about the gold-silver ratio down here. It looked like we had a breakout here above 90. Then we had a breakdown in favor of silver. Oh, now we're going back up. So this is just a mind fuck. This thing is going back and forth. But I will say, if we are going to go into a recession, that setup is more bullish for gold than silver. That in that setup, gold will outperform silver. So you have to be a little careful with respect to silver and getting too bullish just yet. As far as when silver will finally outperform gold, it's got to go above 35 to 37. 35 to 37, that's the major long-term resistance in silver. Once it breaks that, I think you'll finally start to see it slowly and steadily outperform gold. But we're not there yet. Weekly chart, here we see the initial support on the weekly chart around 28.50. This is what I talked about, the stronger support here with the equivalent to the 200-day. That's coming up here. So silver weekly, it did come up to 34. And here's last week. The week before, I think this closed by a hair. It was actually a 12-year high weekly close right here. Could be wrong. But we can see on the weekly chart, this is resistance. I've been talking about 35, but on the weekly chart, look here, 34 is resistance. So who knows? I don't want to completely rule it out, say we've hit a peak here, it's going to come way back down. That is possible. But on the other hand, I should say, if this gets a nice bounce above 32, then you might think, oh, well, maybe this can go above 34 and test 35 or 37. So that's my take on silver. It's just too frustrating to try and guess one way or the other right now. So I'm just going to leave it at that. Now, before I get into the stocks, I know this video is running a little long, but just let me give you the 20-second ad for my service, TheDailyGold.com/premium. You can go there. You can learn about my service. For those of you who are subscribers to my service and have recently subscribed, thank you so much. I appreciate you and your business, and I want you to make a lot of money. That's my goal. That's what we're all trying to do. But for those of you who are not subscribers, if you own various juniors and minors and you're just a little unsure about which ones you should own or do you own the right companies, I can definitely help you with that. My service is for you. In the last few years, I've rededicated myself to really focusing on researching these companies, finding and buying the companies that have the most upside potential. They're not going to kill you on the downside. And look, in a bull market, we know the big picture. We know how the big picture is sitting. Gold and silver are going to move higher. Doesn't mean we're going to be reckless, but we still want to find the best companies and spend our time finding the best companies that can make us lots of money in this bull market. So I focus mostly on that, in addition to technical analysis and other things. I was longer than 20 seconds, but thank you for obliging me. Now, let's finish the video talking about the miners. And I do have more than a chart or two to show you. Okay, so daily line charts here. GDX, that's a clear breakout. Breakout of a 4-year base or 4.5-year base to, what is that, 11.5, maybe a 12-year high. XAU. Other than this little blip right here, same breakout. GOEX. Let's look at this. Not as much as GDX, but this is another breakout here by a hair. GDXJ, it's broken out here, and this is at a 4-year high. So the mining stocks are breaking out of these huge bases. Let's keep that in mind. And let's see, breadth indicators and okay, short term. I'll go back to what I'm saying. So even though gold could pause or rest for a few months, that doesn't mean you want to sell your mining stocks. You have to evaluate each one individually. They are breaking out here. So more money is coming into the mining sector at a time when maybe gold will soften for a couple months. Maybe it goes sideways for a couple months. This also happened in other bull markets. It happened in 2009 after gold had that big move up to 1,000, and then it consolidated for 5 or 6 months during 2009. During that period, a lot of money came into gold and silver stocks, and they moved higher. 2003, the same thing happened. Gold paused at one point during the year, and it corrected, but tons of money was coming into the stock. So we have to be really careful, even though gold and maybe even silver at the same time, maybe they could correct for a couple months, 3 months maybe, go sideways. Money can still come into the miners. Look at these charts. They're breaking out. You don't want to be bearish. Doesn't mean you want to buy everything in sight right now, but I'm just telling you, the miners could detach a little bit if metals correct here. So this is GDX and some of my important breadth indicators. I track these for GDX shape, but that's for subscribers. So I rarely post that. So here we look at GDX, and this is a great indicator to tell you when we're at an intermediate peak. So it's just the percentage of new highs minus the percentage of new lows. And I smooth it with a 20-day exponential moving average. And you can see here, look at these 3 peaks, 2016, 2019, 2020. Look where these were. Let's just throw out 2019 for a second because the 2 biggest were 2020 and 2016. And these were over 30%. You're looking at the 20-day EMA was 32, 33% at these 2 peaks, right here and right here. Right now, we'll round up. We're at about 16. So this is going up. So it's getting more overbought, but we're not at that extreme yet. Another thing to look at, 200-day moving average of the Huey Gold Bugs Index. I track this data. Now, the Huey is just GDX without the royalty company. So they're very similar, but again, GDX is a bigger, more liquid, better index. It's an ETF. But I'm looking at the Huey here and the percentage of those stocks above the 200-day moving average, and I smoothed it over with a 50-day moving average. That's what this blue line is. Look at those 2 points, 2016 here and 2020 here. Look how high the 50-day moving average of this data was. You're almost at 100 here. You're almost at 100 here. Where are we right now? 60. So there's a lot of room for that to move up. Golden Cross percentage, bullish percent index. They come with stock charts. So these are great breadth indicators. They're not my own indicators. And we can see, yeah, these are getting a little overbought. This one's at 82. It's at 93. So yeah, these, they could get more overbought. They could hit 100 and stay that way for a month or two. Maybe they correct a little bit. They go back up. So that's how I look at those indicators. But these 2, which are 2 of my best, I would say, when these things move up to extremes, we will know that we are at or very, very close to an intermediate peak in the sector. We're not there yet. So things are overbought. They're probably going to get more overbought, especially after this breakout. I mean, here's a look at this breakout. Weakness here in a pullback is going to be bought aggressively. I talked about it in another video, people. There's too much money who's missed this move, too much big money that doesn't own miners, and they're going to start scaling in on every bit of weakness in every pullback. You're not going to see a massive pullback yet. Okay, finally, let's look at short-term bar charts, GDX, GDXJ, SILJ. So here's SILJ, more volatile than the other 2 silver juniors. Here's the 200-day moving average. I could have put a line here, maybe around 1150, 1175. So there is good short-term support here, 1239. And again, look, bullish hammer, bullish hammer, bullish hammer. So again, I think gold could top out or go sideways for a couple months, but I think miners are going to outperform. So looking at GDX, GDXJ, again, if there is more of a correction here, there is strong short-term support in 42, 43. Looking at GDXJ, 50, that's going to be good support. I mean, I do hope that we correct that much. That would be nice to have more weakness to buy for a lot of people to get in. I mean, I'm not selling anything at this point, but that's where we are, people. Wow, I know this was a really long video, but a lot to talk about, and that's just how I see it right now. I'm more bullish on the minors and juniors than the metals. Let me know what you think of the video. Leave a comment. Love to hear from you. Thank you so much for your support. I really appreciate it. It means a lot to me. And I hope you have a great weekend, and I hope everyone has a great spring. Talk to you in the next video for Macro Mondays.